Hello ladies and gentlemen, and a very warm welcome to today's webinar, which is brought to you by Shared Services Link and sponsored by Gresham. Today we'll be looking at how to make real-time straight-through reconciliation within your shared services environment a reality. So my name is Susie West and I'm your host for today. I'm the founder and CEO at Shared Services Link, and I'm very pleased to be presenting as my expert speaker panel John Lucas, who's Associate Director, Property and Asset Management Business Applications at JLL, Robin De Silva, Account Director at Gresham Computing, and Neil Vernon, who's CTO at Gresham Computing. You, of course, have a role to play, as always, which is to make sure that you get the most out of this investment of your hour, and that is to ensure that you have your questions answered. So do make sure that you submit me your questions, and the earlier you get them to me, the more likelihood it is that they will be put to our expert panel in the last 10 minutes of this webinar. So just use that free text box provided there and submit those to me, and look forward to getting your question answered in the last 10 minutes of the webinar. Let's have a look at the agenda for today. I'll just be touching briefly on the intention of this session, and then I'll be handing over to John Lucas, who'll be telling us his story, and then we'll be looking specifically at reconciliations within finance shared services and really what the future looks like for reconciliations, which includes a demo, and then we'll be taking your questions in the last 10 minutes. So just touching on the background to this session. Reconciliation is a huge part of a lot of shared services organisations. We all have payments to be reconciling, and it can consume an awful lot of manual effort. And as far as even automating this is concerned, there can be a challenge as far as variety of formats and variety of sources within the business in order to provide that level of automation. So we're looking at some exciting technology here, which is really engineered around some very deep algorithms, which really means that you can move very elegantly to straight-through processing and straight-through matching, and so really kind of allows you to focus your shared services staff to put their energies into exception handling. So today we're going to be centering our story around the JLL story. So just at this point I'd like to introduce our first speaker, who is John Lucas, who's Associate Director at JLL. Over to you please, John.
Thank you, Susie. Hello everybody. I'm an Associate Director with the Property and Asset Management Business at JLL in the UK. JLL is a professional services and investment management firm, and we offer specialised real estate services to our clients. As Susie said, I head up the business systems team within PAM. Our client accounting team services around 1,000 client entities, handling £3 billion worth of client monies, processing 125,000 tenant receipts and 330,000 supplier invoices per annum. The department has a robust controls and procedures in place, and we produce an annual ISAE Type 2 report, which is independently audited by third-party accountants. As everyone, we're always looking at ways to improve the service we provide to our clients and to become more efficient. One area of our business that we were always looking to improve efficiency was within our AR function. Talk a little bit about the issue that we had within our business. Accounts payable, client reporting and service charge functions had all pretty much become fairly automated processes, but AR stood out as an area which wasn't so. The funds within our control are clearly not our own. We have a duty of care to handle client funds carefully, quickly and accurately. The RICS, which is our professional body, has a client monies framework which we have to adhere to, and part of that is relating to unidentified items, and they all need to be processed quickly and returned on a timely basis where appropriate to make sure that our reconciliations are kept clean. Our aim is to process our clients' funds within the same day if possible. We need to try to identify, post and transfer those funds as quickly as possible. We're not really helped by the detail that comes in with transactions on the bank statements. Some of our challenges: the few organisations really consider the payment reference when making payments. There's an emphasis on just getting the payments out the door. They rarely consider what happens when the beneficiary needs to process it. Allocation is left really as the beneficiary's issue and problem. The direct debit scheme in the UK would appear to be the ideal solution for this problem, in that we would have the ability to dictate the references that are sent on payments that are coming into us. The reality that we found is that few of our tenants actually agree to sign up to this process, particularly corporates and nationals, who actually make up the bulk of our tenants. There's also the potential risk for us around indemnities, which make direct debiting a less desirable proposition. We found that very few of our payments actually quote any invoice reference. They may quote a property address if you're lucky, but quite often the reference quoted is completely unrelated to any of the data on our systems. There is an additional challenge of allocating bulk payments by national retailers, where a tenant is making a single payment which covers multiple leases. Remittance advices are not always received on a timely basis, often appearing days after the payment has been received. We also have the complexity of dealing with multiple client systems and the bank accounts that are associated with those. Many times funds are paid into the wrong bank accounts, and that adds complexity to our allocation process. In terms of selecting a provider, despite improvements in property management software packages where the AR allocation functionality has gradually been introduced, we found that allocation rates were still not great. We provided feedback on this to the vendors, to the banks, and also to Gresham, who we had an association with via Barclays Bank, that we felt this was an area that was still incredibly manual, but we felt that possibly a solution was out there for us. We were not entirely convinced that there was something that would be a magic bullet, but we were prepared to give it a try. Gresham approached us with a request to demo the CTC product. We did use, or were using, another reconciliations package within our business at the time, but not for AR receipting. But we decided to make the demo with Gresham a bit more interesting by setting both providers a challenge. Raw data in the form of electronic bank statements and debtor transaction listings were provided. We gave both parties, that's Gresham and the existing vendor, examples of how we'd previously posted receipts and the original bank statement entries to give them a feel for how the posting process happened in-house. In terms of feedback on the trial, we were actually pleasantly surprised at the results by both providers. Ultimately, we found that CTC solution was more suited to our requirements for three main reasons. Firstly, the user interface was very straightforward, or is very straightforward. Our cashiering staff who took part in the demo were very impressed and found it easy to use. We were also particularly impressed with Gresham's understanding of the issues in our particular sector, their understanding of the data received from the bank and the relationship between us and our tenants. Their experience in our sector was very obvious in comparison to the other provider. And finally, probably most importantly, the match rates were much higher than the other provider. So to cut a long story short, there we signed up. In terms of the solution and implementing it, we gave them a pretty challenging implementation plan, which was around 6 weeks, and that started in early November. We ideally wanted to get the product in place for the Christmas quarter day, and we're internally constrained by our IT department, who put a change freeze in from the middle of December, which meant that we had a lot to aim for to get it in time. But we did eventually go live in a week or so before Christmas. The product worked very well straight out of the box effectively for us the first time around. Straightforward allocations that were created by the system are passed to our less experienced staff to put onto the systems. Our more experienced cashiers were able to handle the more complex allocations and act as exception handlers. In terms of the data, it wasn't particularly difficult to set up. We gave CTC and Gresham guys bank downloads, which just came from internet banking, and debtor transaction lists, which just came from our ERP systems. We had 10 or so matching rules set up. and they are looking for patterns in invoice numbers, client references, leaf references, customer references, etc. We've now set up an automated, non-attended data extract process, which means that the allocations and matches are ready for the cashiers at the start of work each business day. We've certainly been able to reduce the resources employed in the cash allocation process, and an additional benefit is that we're managing to create unapplied and unidentified cash listings, which historically were manually created and manually managed straight from the system. We've never been particularly slow in processing our client funds. On a static rent and service charge role, we've now found that we're processing and paying over the cash to our clients much more quickly. We average around a 30% increase in the value of transfers sent out on a quarter day now using CTC than we did without it before. There's always been a pressure to get as much cash posted and transferred to clients as quickly as possible, and never so more than on a Christmas bank holiday quarter day. Prior to using the solution, we had to temporarily transfer resources from elsewhere within our business to cope with a spike in receipts at quarter day. Staff worked long hours, early mornings and late evenings, and whilst this hasn't been completely eliminated, there's much less of a call on resources from other parts of the business. And in particular this year of the implementation, it was quite nice that we were able to call it a day a bit earlier than previously, where staff went home at 12 rather than 3, so another positive benefit. On to what we're doing with the package now. We've managed to train up key business support users in configuring the application, and that's given us the ability to amend the existing recs and tweak the matching rules to increase match rates. We've also subsequently created our own reconciliations for client systems and the associated bank accounts, and they're based upon the original model, and that hasn't been too difficult. The process I've described was really all around electronic receipting and excludes AR checks, but we're now looking to create suggested matches for check remittances from a data feed from our scanning package, which we will then import into CTC, where they can be treated in a similar way to electronic receipts, thus helping to standardise our processes. That's the end of my overview of implementing CTC at JLL, and now I'd like to hand over to Robin De Silva.
Thanks, John. Thank you very much for sharing your experience with us. It's been an absolute pleasure working with John and the team at JLL on this project. I wanted to talk more generically now about the use of reconciliation technology in finance shared service centres. We've heard about how reconciliation software is being used for automating cash allocations, so I thought I'd start with that. And just to recap, so the reason we're using reconciliation technology is because we're taking data feeds from incoming receipts, normally from bank statements, and comparing it against the data feed of outstanding invoices, normally from your ERP system. That data is automatically compared, matched, according to rules and tolerances which are configured by the user. And obviously those will vary from business to business, so not all customers are property management businesses. The data matching takes place almost instantly, which means that you don't need experts to do it, and it means that you can rather keep your staff expertise for investigating things that don't match. It's clear from this that you're increasing efficiency through automation, and that's great because it contributes directly to cost savings. And there is definitely a purely monetary business case for implementing this sort of technology. However, to get your full ROI from your reconciliation software, you would hope to go much further than just data matching and efficiency gains. Ideally, you want to be able to improve your whole accounts receivable management process. So in the case of JLL, they were able to improve their direct customer service to their external customers. However, for many finance shared service centres, your customers might actually be internal customers, and you still want to be able to deliver the best service possible. With JLL, with using the technology that they did, they were able to comply better with regulatory requirements around client money. We have customers in financial institutions, and they of course also have very stringent regulations that they have to comply with, and we hope to always be supporting that. Businesses expect up-to-date and accurate information from finance, and your reconciliation technology should be meeting those expectations. and we'll show you an example of the type of information that should be available in a bit. Finally, there's the usual benefits of moving away from spreadsheets. You improve your financial visibility, your control, you try and avoid errors, fraud, and you have the benefit of auditability. So in a finance shared service center, perhaps if it's remote, you can see what people are doing, you can report on it, whether they are in the same country as you or on the other side of the world. And if you've got people all sitting in the same office and you're doing that to achieve efficiency, if they're all using different spreadsheets that no one can see, it's obviously not the best use of time. I'll hand over to Susie now for the first poll question.
Thank you very much, Robin. So coming up on your screen now, first poll question for the day for you to participate in, please. So how long does it take today for you to allocate and reconcile money received? Is it a week, 3 days, 1 day, or is it less than 1 day? So we like to get the response rate nice and high for these poll questions, please. I think we've got 4 polls for you today. If you haven't joined one of our webinars before, it's important for you to know that we do share the results live, so it's good benchmarking data for you to take away from your hours spent on this webinar. So let's ask that question again. How long does it take you to allocate and reconcile money received today? Is it a week, 3 days, 1 day, or less than 1 day? If you haven't already voted, please do so. We like to try and get these responses up to 60 or 70%, and we're currently at 54. So closing the poll in 3, 2, 1. Okay, thank you. We're at 62% when we closed the poll. Let's have a look at the responses coming up on your screen now. So what do we have here? We have just shy of half of you saying that it takes a day. And then followed by 23% of you saying it takes about 3 days, 16% saying a week, and the minority of you saying it takes less than 1 day. Interesting results. Back to you, please, Robin.
Thanks, Susie. Yeah, those are interesting, and it's what we would expect, and obviously we assume that most businesses would like to decrease that time make it as short as possible. Okay, so we talked earlier about the kind of up-to-date information that would be useful. This is a screenshot from Gresham CTC software, which shows you the information-rich reporting that can be produced based on the transactional level data that's been entered. So you have users processing data at a very transactional granular level, but because all the data is going in through one place, you can report on that database. So on the screen here you can see reports on aging, on the overdue invoices as a whole, but that can also be analyzed by segments such as by business line or by department. Management can see instantly the exposure on outstanding invoices by various factors such as currency, supplier, geographical region, whatever it might be that's appropriate to your business. Once you have historical records in the database, you could also look at things like trend analysis. You can look at forecasting, cash forecasting. When do you think a customer is going to pay based on what they've paid in the past? So all really useful reporting. It can be done in this sort of format, which is very graphical, which people tend to like for KPIs and management board packs and things. But it can also be in a spreadsheet form, or it can even be in a journal format. So if you want to write off a currency difference or something like that and upload it straight back into your ERP system. It's all entirely configurable because the data is just fields in a database, so you can write whatever reports you want. So basically, it's absolutely relevant to shared service centers because you've got transactions that are being processed at a basic level in your shared service center that can be accessed directly by headquarters. You don't have to have a middle layer of reporting and people sort of interpreting in the middle. So we've looked at quite a lot of detail now about cash allocation and accounts receivable management, but these exactly the same principles and reporting can be extended to other reconciliations. So in order to understand other reconciliations that can be automated, if we just look at what CTC is doing, so in this process flow, we're looking at, in step 1, you're looking at data sources. So data is coming from any sources really. It could be statements from banks, suppliers, could be system extracts, and it's all coming into the CTC reconciliation engine. In step 2, that data is then standardized, enriched, or enhanced if it needs to be. This could be by using things like lookup tables. So if you've got somebody paying, in the case of accounts receivable, who regularly is, the money comes in with a different name, you could have a lookup table that converts that to another name. Or you could use obfuscation, which is hiding sensitive data. Maybe if you've got a credit card number or something, you can anonymize the data so that not all users can see it. Step 3 is where this data that's come in is then compared and matched against data coming in from an ERP system. And then the data is compared. If it automatically matches, no one needs to do anything more. This is where we're talking about the pure efficiency gains that I talked about earlier. It's just nobody wastes time looking at data that matches. Where it partially matches, so if some of the data matches but the amounts don't match exactly, users can immediately go in and start investigating why there was an overpayment, why there was an underpayment, was there a discount taken, has someone paid monthly instead of quarterly and they paid a third. You know, that kind of information can be investigated. Finally, you've got data where it doesn't match at all. Once again, CCC provides a portal for investigating that data. We've got workflows around manual matching so that it can be tasks can be assigned, say if someone's manually authorized, that it can all be, if someone's manually matched something, then it can be authorized by a supervisor, and this is all configurable within the system. You can have as many authorization steps as you like, actually. It's all will fit your business, basically, your business processes. Finally, once all the matching process has taken place, you can have the reporting. We've already looked at one of the reports, but this could also be in the form of alerts and emails that get sent out as part of the workflow. So if you look at this as the basis of how the software works, the actual process can be applied to anything. So any rec within your finance shared services can be processed using reconciliation technology. Obviously, the results are most impressive if the volume of the data is high, if the data is complex and unpredictable and you can't control it, and perhaps if you're looking to do something in real time. I mean, in today's day and age, should we be doing reconciliations still monthly on some key accounts? Sometimes reconciliations are done, only completed up to 2 weeks after month end. If you were reconciling daily, and if you were able to reconcile daily, wouldn't you be more comfortable with your financial position? We're all familiar with the traditional recs that people talk about, particularly GL, accounts payable, bank recs. A lot of these are already automated by companies, and CCC certainly can handle those with ease. But we can also, with new technology, we can start looking towards other reconciliations, like intercompany reconciliation. So having a reconciliation platform that can be accessed by users around the world who are all using different systems, speaking different languages, using different data formats, can have a system that can automatically compare all that data. Or if you have a stock tracking system, maybe you have a stock system or point of sale system that's not integrated to your ERP system. You would maybe want to very quickly validate and verify that the information going between those two systems is the same. Maybe you're actually looking for non-matching data. So maybe if you're looking for duplicate payment checks, you don't want the data to match, but you still need to compare the data to prove that it doesn't match, because obviously if you've got matching data, you've got a duplicate payment. So really, at the end of the day, it's any time that you need to provide timely and accurate information, you need your reconciliation software to be able to support this, to really improve your finance operations. I was going to hand back to Susie at this point for another couple of questions.
Thank you so much, Robin. So coming up on your screen, 2 back-to-back poll questions for you, please. The first one, in which of the following do you have high-volume matching exercises using spreadsheets? So please tick all that apply. General ledger, accounts receivable, intercompany trading, inter-system data verification, accounts payable. So please do tick all that apply, and all the ones that kind of really jump out as ones where you believe you have high volume matching exercises specifically using spreadsheets today. So general ledger, accounts receivable, intercompany trading, inter-system data verification, accounts payable. Again, we like to try and get this number up to 60 or 70%. Only 54% of you have responded, so if you haven't already done so, please do tick the buttons appropriate to you. Closing the poll in 3, 2, 1. 58% of you responding there. Let's see if we can get the next one up a little bit higher. Let's have a look at these results first. So there seems to be a fairly common problem with using spreadsheets for doing matching within General Ledger, with just shy of 40% of you focusing on this as an area of concern, possibly. And then accounts receivable and intercompany trading both coming in at 18%, inter-system data verification at 14%, and accounts payable seems to be the less of a problem as far as matching on spreadsheets is concerned. Okay, let's move to the third poll for today, which is looking at your ERP landscape. So what is your ERP landscape like today? If you don't have an ERP landscape, please tick the first box. If you have one instance of a single ERP for your organization, please tick the second. One instance but with, one ERP but with several instances, please tick the third. If you have 2 to 5 ERP systems, that's the fourth one for you. Or if you have 5 or more, please tick the fifth button. 42% of you have responded. Let's see if we can get this one up a little bit higher, please. So what is your ERP landscape looking like today? We don't have an ERP system. We have one instance of a single ERP for our organization. We have one ERP, but with several instances. We have 2 to 5 ERPs across the organization. We have more than 5 ERPs across the organization. 56% of you have voted. Closing the poll in 3, 2, 1. So we close that one still on 57%. Thank you. So let's have a look at the results coming up here. So it's we've got the winner, if you will, is encouragingly actually we have one instance of a single ERP, and we are seeing this increasingly in the world of shared services. That anywhere between 30 and 40% of shared services actually have a single instance of an ERP. Certainly was not the case 7, 8, 9 years ago, where it was considered that only 10 companies globally were running off a single instance of an ERP. So 33% of respondents are running off a single instance of one ERP, followed by 26% having a single ERP but with multiple instances, and then 15 joint third place, if you will, at 15% either you don't have an ERP or you have 2 to 5 ERP systems, and then 11% of you with 5 or more ERPs. Interesting results. Back to you, please, Robin.
Thanks, Susie. To sum up my section of this webinar, I wanted to talk about the expectation that we have of technology in today's world. In our personal lives, through our use of devices, Twitter, etc., we have instant access to sophisticated technology, and therefore we have high expectations of technology generally. It is really no wonder that our customers are expecting speed and instant access to information, the ability to share information easily, consistency of service, data stored in such a way that they can be mined for business intelligence. It's something that acts instantly, and also, of course, finance departments are, as ever, expected to provide all of this sort of service and under a very tight budget. And shared service centers in particular, they were established to achieve cost-saving efficiency, and technology should be is evolving constantly and should be constantly improving that service and that efficiency. So I was at a conference last week where a presenter talked about the IBM Institute for Business Value, and there was a very interesting graph from the Global CFO Study 2010 that was put up on the screen, where finance efficiency was being measured against business insights, and performance optimization was achieved if CFOs performed well against both measures. And I think technology and finance should be measured in the same way. It should be improving efficiency, but it should also be improving business insights. My colleague Neil Vernon, the CTO at Gresham, will now talk more specifically about what Gresham are doing in the reconciliation technology space.
Thank you, Robin. As Robin says, I'm CTO at Gresham. I joined Gresham 4 years ago with a specific remit to bring a brand new and exciting reconciliation tool to the market. Prior to that, I was at a company called SmartStream. SmartStream focused on reconciliations for banks, and I built their flagship product and took that live at the first bank and live to another 120 financial institutions. And prior to that, I was responsible for back office cash technology at UBS Bank, and I built their first reconciliation solution in 1997. So for the last 17 years or so, I've been heavily involved in this really exciting world of reconciliation. So a new product for reconciliations, and what were the problems that we were trying to address? And one of the big problems we spotted was that you all have different forms of data. You know, we've heard from John. John worries about tenants and tenant references and property references and property addresses. And if you're an insurer, you're going to be worrying about broker IDs and insurance premiums. Everybody has a different set of data, and the traditional reconciliation tools were imposing a data model on you. They give you a slot for an invoice number, they give you a slot for a purchase order number, but they really wouldn't give you the perfect schema for your data. They take an educated guess at what you need. But what if their guess is wrong? What if their guess doesn't map on? What if their fixed schema doesn't map on to your data? What you're left trying to do is to shoehorn your data into their model. You're trying to fit, as the picture shows, you're trying to fit that proverbial square peg into that round hole. For our solution, we decided to take a completely different approach. We wanted to use the latest technologies so that we could build a data model, build a schema, learn a data model from your data, and automatically and with no configuration build the perfect schema for your data. Whether your schema is just 10, whether it's just 10 fields that you want to manage or 1,000 fields. And yes, we really do have customers that want to match 1,000 fields in a record. CTC will build the perfect schema for your data. We heard from John that he was able to start the project in November and be live by the middle of December. He was able to onboard his reconciliation very, very quickly. And we've heard that the user interface that was built during that time was actually a delight to use by his reconciliation folks. It was the perfect user interface for accounts receivable in the property management world. And how did we do that? Well, our onboarding accelerator is unique in its ability to look at your data and to suggest how invoices and receipts should be matched by looking at patterns in the data. Technically, we use something called a heuristics engine. What this actually means is that CTC is really using a lot of common sense, but behind the scenes, CTC is trying a large number of different ways to determine how to best make sense of your data. It will try and in real time millions of different approaches to search through your data, analyze all those patterns, and to determine which transactions can go together. It doesn't really matter which data source the data comes from. It doesn't really matter the format. It matters whether you're comma separated or type separated, whether you use US dates or UK dates, and whether references are embedded in narrative or in their own unique field. CTC can look through that data and make sense of it and propose to you the right way to match that data. In most cases, CTC can do that in a few seconds. And most of the time, it's right. It can always do with some manual help, but most of the time, CTC will propose a matching solution for your data that is good to go. And that's what John and his team took advantage of in that first implementation. And that's what's enabled John to then subsequently roll out reconciliations for other parts of his business, where John is completely self-sufficient through the use of our onboarding accelerator. What I'd like to do now is actually pass back to Susie for the next question.
Thank you very much indeed, Neil. So the fourth and final poll question for the day, coming up on your screen. So let's have a look. What are some of the challenges that you face when reconciling business information today? So coming up on your screen, what are some of the challenges you face when reconciling business information today? Please tick all that apply. Oh, apologies, please select just the one. Too many data fields not standardized, pulling from too many disparate systems, operating off too many spreadsheets, manual input of data leads to out-of-date data. So just being asked to select one here. Which one is the biggest concern for you? Too many data fields not standardized, pulling from too many disparate systems, operating off too many spreadsheets, manual input of data leads to out-of-date data. Which one would you say is the number one issue for you today when it comes to reconciling business information? Only 49% of you responded, so if you haven't already done so, let's try and get this figure up a little bit more. We're at 56% of you. Closing the poll in 3, 2, 1. Okay, let's have a look at the results coming up on your screen now. So just a reminder, we asked just for the one kind of standout challenge for you, and none of you said too many data fields, and the winner here, if you will, is 40% of you saying data fields are not standardized, followed by 24% pulling from too many disparate systems, 20% operating off too many spreadsheets, and 16% of you ticking the box for manual input of data leads to out-of-date data. Many thanks. Back to you, please, Neil.
If I could just comment on that, actually, I suspect really we should have given you the option to tick all of those, because typically, you know, those are probably, we see all of those problems in our customers, that the data fields aren't standardized, that it's difficult to reconcile, so you end up using far too many spreadsheets, and you end up with lots and lots of time differences as data lags through these manual processes. What I want to do now is take you to a demo and show you how CTC can be used to rapidly onboard a new reconciliation. Hopefully you can all see my screen. This is CTC. Actually, the screen you're seeing is actually the screen as John's clerks would probably see it, with tenant references and property references and tenant names in the UI. What I actually want to show you, and we saw in one of the poll questions that a lot of you are having difficulty with GL Recs. I want to show you an example of how we onboard or set up a brand new general ledger rec. So what I do as a CTC administrator or configurer is go in and say File, and I want a new reconciliation. This is a one-off exercise that you do when you build the rec, or in fact you revisit it if the data's changed, your bank starts to send you new data, your general ledger gets upgraded and starts to change the format of its fields, or indeed your business practices change and you want to improve your match rates. So I pick a template. I'm going to do a cash reconciliation actually, so I'll pick this template for cash reconciliation. And what CTC needs is some sample data. As I said earlier, CTC is going to build a schema based on your data. So I need to give it some data. And the first thing I'll do is give it a bank format file, so it's a typical feed that you get from your bank. It's actually, if I look at the raw data, it's actually a pipe delimited field feed from the bank. I go back to this view, you'll see that CTC has made sense of the data. It understands that amounts are amounts, that dates are dates. It understands whether that's a UK date or a US date or a European format date. It understands that currencies are currencies, etc. So behind the scenes, CTC is already beginning to make an assessment of this data and look at how it might be stored in a schema. So that's my first file of data that I've got in, and CTC has built a schema for that data. If I now pick up my second file, I'm going to pick up the general ledger view of that data. So pick that up, take it into CTC. This time we've got a comma separated. You can see that CTC has done that understanding automatically. You haven't had to tell it that it's comma separated. You didn't have to tell it that the bank file was pipe delimited. It applies common sense approaches to the understanding of your data. And what it's building up is a view of that data. And as you can see here, it looks at the amount column that we've got off the general ledger, and it's found that there's an 83% correlation with the amount field that's been sent from your bank. And it's made that analysis, it's done that behind the scenes, and it's using that information because in the next stage it's going to propose to you or suggest to you the way that this data should be matched. So in this screen, in this setup phase, we've given CDC some data, and it has built the perfect schema for your data. Now, not many of you said that, yeah, you've got too many fields, but no matter what the fields you've got, CTC will build the ideal home for your fields. Let me go on to that next stage now and use that correlation information that the system has built up to work through matching and decide how that data should be matched. And this is where our heuristics engine kicks in. I'm going to ask you to look through the data. As you saw, that was very, very quick. Typically, as I said before, it's a few seconds for CTC to decide how the data should be matched. And in this first stage, we're going to net on our bank amount against our amount, those fields that we saw were correlated, and we're going to group or correlate across this data set. And that gives me a 36% matching rate, and I'm going to ask CTC to use that suggestion. And with that matching rule, I can see these records that match well, they net to 0. And I can also see the fields that group, but we've got some kind of problem. There's a 60 difference between this row and this row on that matching criteria. Probably still a good match, probably does go together, but the user will need to investigate that. Now, just a reminder, this is just the setup phase. So what I'm going to do is move through now and add that stage in. 36%, that's not a great match rate. We probably want to improve that matching. So there's a lot of data still left over. So I'm going to ask CTC to take a second look at that data, now the data that's left over, to see if it can find other matches. Here we go, it's found another way to group the data. So I'm going to ask you to use that suggestion. And again, we can see that CTC has found some grouping, found that this group here at the top right, next to 0, it's a one-to-one group. CTC isn't just considering one-to-ones, it's considering one-to-ones, one-to-manys, many-to-ones, and many-to-manys, and builds up rules that will match in an appropriate way. As you can see here, we've got quite a large group that does net to 0. So it's my second match stage built up. If I move through and add that stage in, I'm now at 55%. And the typical process is to iterate around that. In the accounts receivable world, we find in our customers that a good rate is somewhere between 60 to 70% that they can achieve in some automated fashion. For our bank customers, we're at 99 point so many nines because they have much higher volumes and actually, quite frankly, better data. That's my matching. So I won't bore you by any more stages. I'll leave it at the 55% and I'll move on and hit finish. And that is a new reconciliation built. At this point, that rec can be deployed into a production environment and run every day against those matching rules. The configuration for that reconciliation is contained in a simple file. I can open up that configuration file, and as you can see, it's a human readable configuration. It's not complicated. This is the actual configuration that CTC runs. If you need to show your auditors how do we match, what are our business rules for matching, you can show them the configuration, and the configuration is actually readable. And that's the end in terms of the demo. And if I can now switch back and just talk a little bit more about other aspects of the CTC solution. And some of the smart or intelligent points that we've put in to CTC in terms of the accounts receivable problem. So, we very often meet things like this. So your invoice number looks like it's got an 8 and so many digits. Your buyer, of course, has to send you money through the banking system, and the reference, the amount of space they're offered is very poor. You know, typically you're up to 18 characters to put in a reference. So humans take shortcuts. They know that all your invoices begin with 8 and so many zeros, so they don't supply the 8 and so many zeros. They just send 12123, and they put comma 4, and they put 7-9. The human can make sense of that immediately. We've taught CTC how to make sense of that. CTC will automatically look at that reference and extrapolate that out into the set you see at the bottom there. And it's just one aspect of how CTC has inbuilt intelligence to make the onboarding of reconciliations really quick and to minimize the amount of configuration that you need to have these highly performant reconciliation solutions. And talking about performance and speed, we have built CTC to be extremely fast, and our engine is able to literally match thousands of transactions per second. It's moving on. So Intel have independently benchmarked our engine at their high-performance labs as matching 50,000 transactions per second. Now, I don't suppose any of you actually need to match at that kind of rate. And you're probably orders and orders of magnitude below that need. But what it does mean is that if you give CTC data, CTC will match it in real time. As that data changes, CTC will rematch it in real time. The CTC UI is never out of date with reality. And actually that performance does come in useful to us. We have a partner bank in Asia. It's currently rolling out CTC to 40,000 of its customers in 44 countries. And they are able to scale CTC to this volume with relatively low hardware because of the raw performance of the CTC matching engine. I wanted to talk about one final thing. We built CTC to work for both small organizations and large multinational corporations. To do that, it understands roles and responsibilities and delivers a user experience that can be designed and refined so that the CFO and the most senior members of the organization can have one view. You saw elements of that in Robin's presentation, all the way down to an AR park operating in a shared service center in a low-cost economy. You can configure CTC for all the different use cases in a very large organization. CTC fits into your authentication and authorization scheme and can provide single sign-on using the same username and password that you use for all of your other corporate systems. As Robbie's already mentioned, we built sophisticated workflow into CTC, and that's used to manage escalations for I6INNI processes and intelligently route exceptions and problems to the right part of your workforce, allowing you to intelligently manage your workforce. So whether you're nearshored, offshored, insourced or outsourced, CTC can be tailored and configured for your specific needs. At this point, I'd like to hand back to Susie.
That's great. Many thanks indeed to John, Robin and Neil. Let's move through to questions, please. So if you haven't already sent me your question, please do so as we move into the Q&A. Okay, let's start with the questions that we've got. So possibly to Neil, please, what are your typical match rates?
It's really, really variable. So in the AR world, as I said, if we start out with 60%, to be honest, we're doing quite well. But with some work and some refinement, we can push it up. Our bank customers are literally in the 99.59% matching, but they're dealing with the millions of transactions. So to an extent, it is highly dependent on your data. What I can say is that with the smarts that we put into the engine, the intelligence we put into the engine, and the ability to take in any data of any form without compromise, we will achieve the maximum match rate that is possible given the data that's presented to us.
Is there any particular best practice that a customer can follow in order to get the match rates up nice and high, or do best practices really not apply within this case?
It's an interesting question on best practice. Other solutions require you to have best practice to get high match rates. And I'm all for you know, creating industry groups and pushing your banks to give you better data and pushing your GL or ERP provider to do more to give you good data. And it's great, and you should invest lots in best practice, and that will help. But you also need the tool to recognize that actually in many cases best practice doesn't exist. And there's a lot of change, organizations are agile, and you need to be able to work well in the absence of best practice and the absence of standards. And I think one of your questions was this lack of standardization. Lack of standardization is another way of saying lack of best practice. And there is a lack of best practice, so you have to work well in a world where there isn't best practice.
Mm-hmm. Okay, John, could you remind us which interface, which ERP you're using, and also what interfaces the solution connects with as well within your own environment?
Our prime system internally at the moment is an application called Yardi Propware. We also interface or take certainly data feeds from many of the banking applications and another property management application called Cube. So just those.
Okay, and John, to what degree was IT involved in the project, please?
Not a great deal, to be honest with you. As I said, we had quite an aggressive timescale for getting the application installed, and my experience previously with IT is it can be quite torturous, even getting quite a small application in. But this one went relatively smoothly. You know, the amount of involvement wasn't great, and I think that's probably a compliment to the package itself. It isn't a particularly complex package to install, and we had sort of very good help from the consultants at Gresham, really, in terms of making it easy for IT. So surprisingly, not very much involvement, I'd say.
Okay, and who ran the project at your end, John? What was their expertise? You did, okay.
I did, yeah. So I mean, it was relatively light touch from our perspective. We didn't really have to source any sort of specialists at all. We took people from the business. Obviously, there was cashiers and some people who worked with me involved, but yeah, effectively, I headed up internally.
Okay, and as far as you obviously turned it around very rapidly. What was the kind of time that you had to dedicate to this project to get it up and running in the time that you did?
Probably, you know, if I say thinking about it, of those 6 weeks from when we started talking about it, getting it in, I would say personally probably 3 weeks pretty much, you know, full on, which I think was a relatively small price to pay for the benefits we get. So yeah, about 15 days of my own time, I'd say, all in all.
Okay. And also, John, I mean, the selection process, could you just walk us through how, obviously you were right at working with Gresham, how long did you allow for the selection process, and did you go through like a typical RFP process for that?
We didn't go through an RFP process. We had, I think as I mentioned in my presentation a bit earlier, we had an existing reconciliations tool within the business that we were looking at to maybe do AR matching. Gresham came along, as I said, we knew Gresham via the relationship with Barclays that we both have, and the idea at the time was that I thought, you know, or we thought it would be just interesting, given that the sort of claims made about the package, it's either going to be obvious that it works or it won't, basically. So the decision was made really just to give them, we took real data, gave them details from the ERP systems in terms of the desk transactions, gave them real bank feeds. As I said, we gave them, I think it would only be fair to give them some help with understanding the logic of how we'd posted some of the transactions previously. So I think we had, with both parties, we had a couple of calls over a week or 10 days or so. And then at the end it was a case of them presenting their results and talking us through yeah, exactly what they delivered. So as I say, it was quite surprising that we got as much as we did because we were very sceptical that we would get anything at all. But the results were pretty impressive, and in terms of what tipped us with Gresham at the time, I think as was, we already had, by the banking relationships, we knew them. We knew that we could sort of depend upon their sort of consultants that helped us out a lot in the past with various things. And the match rates were good. The UI was good.
Okay.
Yeah.
So just again, that kind of takes me on to another question. So, John, again, just focusing on your experience here. So it sounds like you did a bit of a trial then, which you talked about in your. So either John or the question is this product actually available for trial to kind of check out the feasibility? Is that how you actually have many of your clients kind of get through the proof of concept stage?
Yes, that's often typically what we do is if we're speaking to an organisation, the best way of proving that actually we can automate their reconciliations is to take a sample of their data under NDA and process it through CTC and come back and present it rather than showing a generic demo, which we do have. We do have generic demo data as well, but we recommend using your own data because we're proving it to you. So it's a mini proof of concept.
Sure. Okay, good. Do you have many clients or any clients in the automobile industry? Or, and a wider question, what kind of industries do you have within your client base?
We've got a wide variety, but no automobile industry yet.
And in fact, I wonder why that question was asked.
Yeah.
Well, I mean, I'm just curious. I mean, is there anything that's industry specific here within the actual? I mean, I guess it doesn't. It's kind of industry agnostic. This particular tool.
Exactly.
I mean, yeah, exactly. Go ahead. Sorry, Neil. You were going to mention something there.
We've got 2 partner banks actually that roll out CTC directly to their customers through their website. So whilst we might not have direct automobile customers, our partner banks will have, and we've been able to use that genericism that you just mentioned in the engine to work across a wide variety of verticals, from people like Shell to Linfox, a whole variety of different verticals that can use the software.
Okay, good. Ladies and gentlemen, we're coming into the last couple of minutes of this webinar, so if you haven't presented your question, please do so. Question for you, Neil. To what degree is this available in the cloud?
It's completely available, actually. So again, you should talk to Robin, but it's available through a cloud deployment.
Yeah, it's not something we host, but we have a customer actually going live shortly who it's being hosted in Amazon Cloud in Dublin actually, and they're not in Dublin.
Okay, good. Final question for John, please. What were the actual kind of direct savings as a percentage or headcount savings, if you were measuring it that way, that you've seen because of using the tool?
We didn't really. I mean, there have been headcount savings in that particular area. What we tend to do is redeploy those people really in more, I think I mentioned, sort of exception handling duties really, and I think the other measures, it isn't all about saving money, it's more about sort of improving client service really. I also mentioned that we turned around, the cash much quicker, so the faster we identify it, the faster we can post it, the faster we can get it out the door, the better it is for our clients really. So whilst there have been some cost savings on headcount, I think the main winner for us has been in terms of improving our client service.
Okay, good. I mentioned that was the last one. I'm sorry, I have 2 more just to squeeze in quickly, so if I can ask for fairly concise responses. I'll put this one to Neil, please. The question is, does the interface feed, or can the system take feeds from legacy systems like mainframes?
Yes.
That was concise. And also, I mean, this is the same gentleman that was asking about whether or not, I believe, yes, whether or not you had any clients from the automobile industry. Can the solution be customized according to client requirement, or to what degree can it be customized?
So the match rules are all customizable. The data schema you saw is your data schema, it's not our schema. The user interface can be laid out exactly as you want it. It can, if you're fussy about branding, it can be completely branded as your solution. We take all of our roles or authorization schemas from your existing systems. We use aliases from your existing system, so it's completely customizable against your particular requirement.
That's great. So many thanks to our speakers, to John, to Robin, and to Neil. Thank you very much indeed. And if you'd like to contact them, you have their contact information available on the screen. Coming up for Shared Services Link events, we have the VAT compliance through SAP Control taking place in November. We've just launched our Leaders Summit taking place in London in March, so please look out for more information on that. We are taking early registrations. As far as the continuation of our webinar series is concerned, we have 4 great webinars coming up over the next few weeks and months, so please make sure that you register for those nice and early. And thank you very much for your time and attention today. We look forward to welcoming you next time. Goodbye.